a step closer to beginning the real Forex journey. Today we'll be talking about sessions in Forex. Forex, or transactions done in Forex, are conducted within a time frame of diverse countries, and they are, however, divided into sessions. In the table of contents, we'll talk about the Asian session, the European session, the North American session, the trading sessions overlap, trading session strategy, trading sessions tips and tricks, and finally, the market participants across all these sessions. And in conclusion, we'll recap on the major key points of the class. Now, the market operates 24 hours a day, 5 days a week. Now, these 24 hours in each day is divided into 3 major sessions. Now, each session within its own characteristics and opportunities. One of the key importance of knowing the trading sessions is that you can capitalize on its peak moments through its liquidity and opportunities that each geographical market brings. Transactions are being handled daily geographically across countries. Each country has countries that they deal and transact with. We have import and export relatively. Now, these items are cargoes and consumable goods, organic and chemical supplies, automobiles and oil, and so on and so forth. We'll talk more about this goods and items in the intermarket correlation class. Now, you have a distinctive idea of what transactions happen daily on a geographical scale. We can move further. The Asian trading session begins the trading week on a Monday morning at 12 a.m. to the early hours of the morning around 8 a.m. GMT. Now, this is when liquidity is restored to the markets after an OTC, which is an over-the-counter trade during the weekend. Now, from this, you are fully aware that the Asian markets are the first to see all the action. The Asian session is widely and popularly known as the Tokyo session. There are mainly notable countries present during this period, like China, Australia, New Zealand, and Russia. Since they are the first in action, they come with a low liquidity. As the major backbone, New York isn't awake at that hour, so low volatility with low volume and liquidity present. It gives you a clear entry and exit levels. Now, with the previous statement, you can tell it's ideal for a sound risk management due to its low volatility. Now, most professional traders look for breakout opportunities after the Asian session ends. The European session is the second session as it continues from the Asian session. It starts at 7 a.m. and ends at 3 p.m. GMT. As the EU session takes over in keeping the currency market active, just before the Asian trading hours come to a standstill. Now, London has taken the honor in defining the parameters for the European session until date. The European session is widely and popularly known as the London session. Germany, France, United Kingdom, and the other 17 countries body holding the EU body are referred to as the EU zone. The EU zone comprises of more than half of the nation in the EU. It comes with an influx of currency movements, so breakout comes with a high tendency. High volatility, high liquidities are the major benefits for intraday traders with a high and huge volume for the kill. With such a high risk to high reward, one must practice and be sound in risk management at such sessions. The North American session is the third and the last session, which makes up the full stock exchange trading day. The North American session starts at 12 p.m. and it ends at 7 p.m. GMT. Now, unlike the EU session where the Asian session ends, the North American session comes online, but the day is only halfway through for the European sessions. So there's a higher influx in the participants and the market inflow. Now, it comes as a little surprise that activities in the New York markets itself, as they have high volatility and participation in the session. And if you have been a dedicated student so far, my first ever class, I had shown a daily graph of the Forex market with a daily volume of 5 trillion, in particular 5.3 trillion Forex trading, and the New York Stock Exchange has a volume of 28 billion daily. New York has the highest trading volume, hence it's been referred to the New York session. Now, with such an influx of high in quality participants, you can be expecting a bigger push towards the current trends or a possible reversal which comes with a great momentum. Now, this is a tactic to look out for when you go for peep hunting or catching adventures in the market. If you have been glued to the screen and your ears to my voice, you would have noticed that there is an overlap in these sessions, in these 3 sessions I have mentioned. Now, the first overlap is or are the Asian to European session, with the shortest fairly 1 to 2 hours overlap. And the second overlap is the European session to the North American session, which is the longest, with a 4 hours overlap. Now, during this overlap is where most volatility of the market occurs. Now, when another able body is present, it is very possible to push through a barrier. Trading session strategies are very vital and very common with intraday traders. Now, if you're present during those overlap hours, you'll be able to grab some of those volatilities and push in the market. Now, when you trade the pairs that overlap during their sessions, it gives you the urge for you to scale the right pips. I believe we all know what pip is. Now, for those watching for the first time, PIP is a percentage in points, and this is where the profit target occurs. Asian sessions overlaps are GBP to JPY, EUR to JPY, which is the pounds to yen and the euro to yen. And the European sessions overlaps are the EUR to USD and the JPY to USD, which are the euro dollar and the pounds dollar. If you trade opposing sessions, you stand the chance to get a better entry before volatility and liquidity takes place. Now, when you trade overlapping sessions, you benefit from this pool of liquidity. When you utilize the economical indicators like news and events to confirm your buy or sell bias. Now, with the knowledge of these sessions, you can manage your risks better as you are aware of the market's volatility levels due to its sessions and its pairs. The market participants across sessions are the institutional giants, the central banks, the commercial corporations, hedge funds and speculators, and finally, the retail traders. Now, on the screen, you can see the difference between a retail trader and institutional traders. The smaller versions are the retail traders and the bigger versions are the institutional traders. And so as the pie, the bigger pie, the red color are the institutions and the small pies are the retail traders. Now, institutional traders impact the market the most as they come with a huge volume of currencies to the markets. The bigger the currency, the bigger the advantage you have and the bigger effects you can cause to the markets. Now, institutional traders who are funded by financial institutions have a better advantage as they trade with more sophisticated trading tools and access to better information. Now, they make larger trades, which can have a major impact on the stock prices. They can, however, influence the market trend, which is the market structure. We'll talk about trends in the next class and structures in the next class. Now, while the retail traders make a lesser impact as they are just singular bodies like you and I. And the singular bodies who buy and sell securities for their personal accounts. Now, they typically have lesser money to influence the markets in a great way, and they have less access to informations and tools as of compared to these institutions or institutional traders. And that is why it is good to have a high key information of the tools, which are the market sentiments, the fundamental analysis, and the technical analysis, which I had mentioned in my first class and my second class. And being able to utilize these tools to your maximum ability to stay on the advantage within the sessions in the markets. Luckily for you, I am here to make this possible and here to explain how to use these tools to your advantage and how to use it to the maximum ability so you can be as profitable as these institutional traders and be able to make a fair share of the markets during these sessions. Thank you. See you in the next class.